Welcome back to another video. In this video, we will be looking at Fibonacci's and how you can use them and implement them on your trading strategy and how you can rely on them and how useful they are. We will also be looking at Fibonacci extensions, which give you the TP, which is a take profit of every trade you will be taking using the Fibonacci. So let's get started into this video. So if we look at today's example, we will be looking at gold. And remember, we're just using gold for right now, but Fibonacci is the same with any pair. You could trade it using, if you want to trade Bitcoin, you want to trade it with Tesla, any stocks, with Nvidia, with any indexes like NAS or US 30 or anything. The technical analysis is the same with any pair. But for the sake of this video, we will be using gold. And we will be using the example of this past year when we saw a major bull run. So I'm going to show you guys a good example of how you can use Fibonacci and the Fibonacci extension. So let's get started with the Fibonacci. So the Fibonacci, all the analysis that's done is on tradingview.com. You go to tradingview.com and you could type in the pair or the index or whatever you want to be trading or analyzing. You type it in and then it will pop up on your screen just as how you're seeing right now. So let's get started. So the Fibonacci extension, the regular Fibonacci will come out over here. And usually how it is, it's after a big push. After a major push, this is where you begin to draw a Fibonacci. So here we could see there was a major push. And as you guys always hear, what goes up must come down. So what a Fibonacci is, it's basically trying to see the levels where it comes up, it comes down, where the floor is, and it could continue to bounce up higher and bounce up higher. Let's say if we're in an uptrend, if a Fibonacci would basically show that it will show the push up and then it'll come back down to make the next stair, and I'll show you guys more in detail how it looks. So to begin a Fibonacci, you can't just draw it anywhere. Like if I wanted to draw it over here, I can't just draw it there and rely on that. It's always at a broader picture, and like I said, it's after a major push. After a major push. So, okay, let's start over here. We saw a major push towards the downside for here in gold. We saw it consolidate, and we saw that there was a floor there. There was a floor right here. Let's just draw it out so we can see where the floor is. Once we started seeing gold started pushing up, that's when we can start to begin forming our first Fibonacci level, which would be 0% level, which is the floor. And then we saw a major push, major push, major push. And then once we started seeing this, it can become tricky on when to draw your top of the Fibonacci and when not to. A good way how you can see why this is a top, we can see a shoulder, a head, and a shoulder. And then we could see also a break of structure over here, confirming the head and shoulders pattern, confirming gold price would continue to go lower in this scenario. So we can now mark this as our top and the top of the Fibonacci. So let's get started there now. Now that we got everything out of the way on how is a good setup to do a Fibonacci, because you can't just draw Fibonacci's everywhere. There has to be fundamental and technical analysis behind why are you drawing it there and what is the reasoning behind that, right? So I just show you guys the reasoning behind that. It was after a major push. We got a floor, a bottom, and we started seeing momentum towards the upside, and we didn't see a clear direction towards looking for a floor until we saw a bearish price action, which happened here. This is bearish price action, which is the head and shoulders. So now we can start looking for the floor to continue the trend higher. Why? Because if we go on broader picture, we are in an uptrend. We could see higher lows, higher lows, higher highs, higher lows, higher highs, and making a higher low over here. So if we're back here, let's start with our Fibonacci over here at this wick, and then let's extend it to the top of this momentum move that we saw over here. Okay, so this is where we see our levels. And when you start tradingview.com, these are the levels that are going to come back with. The only levels that's missing here is probably the 88.6 that other people use, and also I've seen people use the 12%, but for the sake of this video, we are just going to be looking at these, which is the 23.6, the 30.2, the 50%, the 61.8, and 78.6. So what are these levels? These levels are psychological levels where traders begin to continue the trend when it hits those levels. And I will show you guys how these levels could act as support and resistance for your own trading analysis, not just a direction of where it's going to continue going, but it actually serves as support and resistance. But let's get started with Fibonacci. So here's the 0% level, and then here's the top. We drew the top out, and then we can see where it came to come. It came to bounce at the level of 38.2. 38.2 level. Whenever we get a 38.2, 23.6 level on the Fibonacci, it means it's going to continue the trend in a rather faster pace, and it's going to continue the trend really strong, really strong. And then 50% level to 61.8 is called the golden zone. Why? Because it's a good retracement level, and whenever it reaches those levels, it doesn't just continue the trend, because sometimes there will be instances where you're trading, you get to 23.6, for example here, right? We get to 23.6, we got to bounce back up. Even after we drew the Fibonacci, we got the bounce, but what happened is too weak. It came over here, and the 38.2 acted as really great support. But obviously, you are not just gonna enter trades just based on Fibonacci. You always have to do it on confluence trading, multiple signals as to why you are entering a trade. So for the reason at 30.2, there's a lot of reasons that, for the sake of this video, we are not going to get into all the reasons why you would enter buy. We're just going to see why, as a Fibonacci level, you would enter buy. But 30.2, but usually 50%, 61.8 are the strongest levels. The strongest levels where if you see a bounce, it is going to respect it, and it's going to continue the trend either higher or either lower if it's from the top, if it's from a bottom to top, the Fibonacci drawing. Okay, so we see that it went 38.2, and we saw that the market continued to rally in a strong pace, right? Okay, how does this act as support and resistance? If we look here, as I just mentioned right now, it came to 23.6, acts as support. We got a break of it, a retest of that same support to continue the sell-off. And if we were to get a break of this 38.2, our next level to look at would be 50% to enter the buys. And we keep getting the break here, 61.8. And once we know we're in an uptrend and it comes to the 61.8, it's a really strong level to buy, and it would actually hold, because these ones could be a little bit weaker, the 23.6, 38.2 weaker levels for it to continue the trend. But in this scenario, 38.2 acted as really great support to continue the trend upwards. And I will get into Fibonacci extensions. The beautiful thing about Fibonacci extensions is it gives you where you're going to set your take profits for the trades that you are taking using the Fibonacci's. It's really great, and let me show you guys that right now. So let's get into Fibonacci extensions, which would be over here. It's just right under the Fib retracement. So you draw it at the same levels. You do your Fibonacci retracement. You do 1, 2, and then the level respected it, 3. And this is how you could start drawing your support and resistance levels. It's a really good method to use to start drawing, and I'm gonna mark them. 23.6. Let's mark that one. Let's clone another one. Is mark it at 38.2 on the Fib extension. Let's mark 50% level. And obviously, this is your chart, your analysis. You could color code these however you want. Just for this video, we are going to be using red because that was the color that I had before. Okay, this one's at 61.8. And like I always said, 61.8 is the golden zone. Either it be in fib retracements, fib extensions. It's always the golden zone. Okay, so now we drew out. Let's say you don't like all these colors, all this stuff on a lot of indicators on your chart. Okay, once you drew out the fib extension, okay, let's look over here. Let's delete this fib extension chart. Boom. Now you have your support and resistance levels that are respected. So this is, again, let's draw this. Let me make a line over here. This over here is our starting point, which is a 38.2 level right here on the fib retracement. After that, all these levels are from the fib extension that you can use as take profit. Okay, so here we can see first take profit, second take profit, third take profit, fourth and fifth and sixth. It went all the way to the sixth level on the fib extension. On this one, obviously, you never know to which one are you going to, how do you say it? Which one are you going to take your profit? Be like, that's how trading is. Any trade is never guaranteed. But if you continue this along with technical analysis, let's say you support resistance and you add it with other stuff, zones, channels, trend lines, that's going to help you know and be okay. Okay, I'm gonna get out now because is doing this. I see this price action forming, so I'm going to get out, and I'm okay with that. So here we see that it couldn't reach the level. Okay, we got a retracement. That's okay. And if we go on lower time frames, this is going to be a retracement. It looks like a 38.2. Let's draw it out. If we were to go on lower time frames, and it was at a 50%, and it almost went to 61.8, golden zone, golden zone. Okay, and then we finally got the break of this resistance. We got a retest of it to continue. Look at that, and you could have hit your take profit right there. Why? Just because of that level, because it was the level, a really strong level here as well. We got the break of it, a retest, enter more buys, just keep on. That's how trading is. You just don't overthink it. Whenever you see simple technical analysis, break, retest, enter, buy again. Here you get another break, another retest, enter, buys again. And then here's where it becomes a little choppy because there's so much volume here in gold. So this is where, here we got the break on lower time frames. I'm pretty sure there was a retest. We enter the buys again. Same here. But there has to be a time where you can't get too greedy, and you can't just rely just on the Fibonacci just because it's always going to hit this level. It's never going to hit always on that certain level. This is just an example I'm using how to use Fibonacci extensions, and Fibonacci extensions are usually used to see where you can see the market top, where you can see the market begin to reverse and create a different trend, because it can always continue going higher. But like I said, this was on lower time frames. This is on the 4-hour chart. Okay, we see we're on uptrend. Why? We got higher lows, higher highs, higher lows, higher highs, and it came to do a higher low. Okay, let's say for example you missed out on this entire move. You're like, man, it was a 30.2, I didn't enter, and you still missed out on all the breaks of the resistances over here, and you're like, man, I messed up. Okay, when you see a major wick off like this, whenever you see wick offs, those are good signals of a top that's happening. Okay, let's create a new Fibonacci over here. Now, okay, let's forget about that. Where it's a new day, it's a new trade. Let's see what we can find out over here, right? Okay, let's take out the Fibonacci over here. Let's take it to the top. Remember I said, always draw a Fibonacci after a big move. So we saw a big push up here and then a big push straight down. And what do we see? Fibonacci levels all over again. This time, it couldn't even respect 23.6. 30.2, we see it respect a little. We see a little wick off over here. But within the next 4 hours, it just broke right straight through it. This one broke right straight through it. It came to retest the level, to sales, and it came to 61.8. And like I tell you guys, 61.8 is such a good psychological level to enter trades. Why? Because let's look at this. It came straight to 61.8 at the price of 2012. And then we saw a push all the way up to 2039. On gold, we got over what is that, 24 points going towards the up direction. So if you would have just entered the buy here at 61.8, just because it's the golden zone, you would have been in big profit. You would have been big profit and close out over here without having the need to close without the need having to use Fibonacci extension levels, because just of this 61.8. Eventually we did see, obviously with more technical analysis, you could just draw trend lines over here. You see over here, we see we see a nice break of this trend line, and then a retest of it to continue sales. So that's perfect signal to get out that trade if you were to enter the buys here. And on top of that is such a rising, it's a rising wedge, which is really bearish, and we did see it. We saw it finally come break 61.8. We saw a retest of around that level, and then we start seeing a floor. We see a double bottom, and then we start seeing a lot of support over here, and we see a wick off, which, like I said, whenever you see a wick off, it's really previewing you the momentum where it's going to head, where the market could be heading to. And look where it stopped. Look at where it stopped at the 78.6 level to continue more buys. Why? Because we are in an uptrend. So steps to enter trades on a Fibonacci, you first have to recognize the trend, the overall trend of the market. You have to recognize if it's forming a higher low, and also what level of the Fibonacci level it's leaving on, it's basing on. 23.6, it's a weaker level. 30.2 is a stronger level. 50 even stronger. 61.8 is the strongest level. And then so far it gets weaker and weaker. 78.6 gets weaker. 88.6, and then 0%. It was always could be a double bottom, but if it breaks that, structure has been broken already. And that's why I say I can't reiterate it enough. Never base your trades, enter trades just purely on Fibonacci. Here it looks so simple, but once you start trading real life, it's not this simple. It's not this simple because a lot of factors go into it. Okay, so now let's use Fibonacci extensions again, so I can give you guys an example of an example of when it doesn't just keep going up, or structure is broken, or trend is changing, right? So here is a 78.6. Let me just mark it out for you guys. Here is at 78.6 level. Okay, now we could delete the fib retracement. This is a great zone. Now let's take out our fib extension. Let's do the same thing from the bottom to the top of where we drew. Right there. Okay. Now, like I said, you can use this to draw out your support and resistance. This would act as resistance, as long as you're still buying. But as we can see, resistance can sometimes act as support. Just right here, broke over resistance, acted as support to continue the trend. Broke resistance, acted as support to continue the trend. Broke resistance, but it reversed over here, and then we got a nice retest. And that's when you enter a trade. So here, let's say you would have entered. Okay, you're like, okay, now when do I get out? Wait till first TP 23.6, right? Okay, you take profit. You could wait for a retest of this area. If it doesn't retest, it's okay. You could wait for the next break of resistance. But here we got a nice retest. You enter a buy again. You just follow it. And one way I like to follow trades, if we were to enter trade here, boom, let's draw a trend line right there. Create nice support, and it will let you know when to get out. Okay, we keep holding the trade, keep holding the trade. I remember this is days, week long holds. We get a break of this. Okay, we get a nice retest. You could even scale in again, put stop loss right back under, just in case it breaks under. Like this will happen here. It breaks 50% level. Once it start reaching these levels, you should be okay taking profit. You shouldn't want to go all the way to 61.8, 78.6, or even higher. You should not be wanting that on every single trade because it's unrealistic. You have to be okay and happy with what you are trading, with what you are making. A win is a win, you know? And also always look at structure. Always look at technical analysis. Don't base it off just on the Fibonacci's. Okay, and how can you see that this fib extension is now serving as a turning point, right? We finally got a break over and a break under this important resistance slash support, and we got a retest. You know what's beautiful about fib retracements? All right, we could take out our fib retracement. This is a big push, bearish push. Let's bring it down here. Where did this land? If you guys can see, this came to land at the 61.8 level for sales. So, okay, that's when you begin to see, okay, this could be changing direction. Okay, let's enter the trade for sales at the 61.8. Why? Because we got a break of structure. And then we got a retracement. We could also see a head shoulder, which is a bearish price action for this scenario. Let's say you miss on this 61.8, right? You always have to wait for retracement. If you miss a trade, it's okay. There's opportunities every day. Every day there's a new opportunity to enter trade. Remember this trend line we drove out? It acted as support, broke it, and it came to retest it. This would be your perfect time to enter a sell. Structure is broken. Trend line is broken. This support is broken on the fib extension, and we got a retest of that support acting now as resistance. And then we got the 61.8 and the retest of this trend line. Really good time, really good signal to sell, really good signal to sell. So there's just so many opportunities just using the Fibonacci retracement, Fibonacci extension, and this is why people love using it. Use this on their trading every day, and I use it. I use it in my trading strategy. I always try to implement it. I don't use it all the time because there's a lot of more. The simpler, the better. I try to trade. So, but it's the Fibonacci retracement, Fibonacci extension are really, really useful tools that you can use to elevate your trading game, to elevate your trading style. Remember, the more comfortable you get using all these strategies, all these indicators, the better, the better. And I'm just here to try to help you guys, put you guys on the fibs because they work. And if you guys hear that they don't work or that they're false signals or this and that, it's not true. It's not true. Because if you learn how to use it the correct way, the fib retracement and the fib extension will pay off. So I encourage you guys, if you guys want to learn how to use this, if you guys don't know how to use it, go on tradingview.com, backtest. The best time frames to use the Fibonacci's is on higher time frames. Don't try to use it on the 1 minute, 5 minutes, 15 minute. It's not good on those little time frames. It's always good to use it on large time frames because either way you're going to catch larger moves if you do it on larger time frames. You already know where the market's going on the trend. You always have to follow the trend, not go against it. And when you start trading lower time frames, it becomes difficult, and you start getting confused. Okay, do I sell? Do I buy? Okay, I'm getting 61.8 on sales, but I'm also getting 70.6 on buys. So, okay, it just confuses everything. So just try to look at the broader picture. And try to follow the trend. Hop onto the trend, and you will be you will be really profitable if you do this. Along with this Fibonacci's, add your own style of trading, your own analysis. You can use trend lines. There's trend lines. There's channels. There's many more stuff that you can use that will help you be more confident in trading. If you guys want me to make videos on that, like trend lines, channels, other stuff, other what I use to in my daily trading, I can make videos on them. Just leave it down in the comment what you guys want to hear. And if you guys like this video, don't forget to like and subscribe, share with your friends, with your family, with your trading friends. And I hope to see you guys on the next one. And you guys have a good one. Stay blessed.